In the absence of a breaking news from the Middle East and the other energy-related reports, oil is trying to consolidate. However, it's probably just a temporary phenomenon, which is likely to be followed by a continued rally. According to the trading chart, there have been no dramatic changes in the market so far. Local speculation has not yet resulted in a trend shift or a full-fledged move. Brent crude remains range-bound, reflecting uncertainty among market participants. The world media are increasingly talking about a wider conflict in the Middle East, thereby increasing fears and panic, including about stable energy supplies. Against this background, oil could rise above $80 per barrel in the near term. In addition, major central banks intend to cut their interest rates, which will weigh on the dollar and Europe's single currency. When these assets lose value, oil traditionally edges higher. Likewise, the upcoming monetary policy easing by the Federal Reserve and the European Central Bank paves the way for a rally in the yellow metal, which is still consolidating at around the $2,050 per troy ounce mark. In the near future, gold is likely to advance to $2,100 per ounce unless inflation in Europe and the United States rises sharply. However, this scenario seems unlikely. Speaking of the Russian currency, it's trying to stay firm below 78 rubles per dollar. At the moment, the ruble is being supported by both the ongoing sale of export proceeds and a gradual rise in oil prices. The situation in the oil market also sets the stage for the ruble's gains in the medium term. Exporters will sell the exits received at the new prices only in about 3 months, and thus the prospects of a higher oil prices combined with the rules on the sale of export proceeds introduced last year paves the way for the ruble's sustained rally, at least in the first half of the year. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us, and see you soon.